Okay, MegaWhale team, welcome back to the channel. Thanks for tuning into today's video. It's great to see everyone. It's great to have everyone here for today's video. Of course, I hope everyone's having a fantastic day and, ready to dive into the charts with me. So let's go ahead and get into it. But before we do get into it, I want to talk about two things. And first is a giveaway, and second is going to be our crypto channel. So head down to the pinned comment down below, click the link, join our Telegram channel, make sure you're in the correct one. I know there's a scam, there's a couple fake ones going around, so make sure you're in the correct one. This is it over here. You can get access to daily updates, market analysis, whole range of different posts, technical analysis, and charts in there, okay? Our second analysis is update is a big one. We're at 2,999 subscribers, guys. We're one subscriber away from 3,000. And you know what that means, guys? We're doing a 3,000 subscriber giveaway. This is how it's gonna work. We're gonna make 3 winners, 1 winner a week for 3 weeks. All right, that's gonna be our 3,000 subscriber giveaway. Every week, we're gonna select a singular winner from the comment section of a randomly selected video posted during that week period. Okay, it's going to start this week. So comment on every video. We're going to choose one random winner every week from the comment section of a video spanning each week. And that person will receive an amount of money. I haven't decided how much. I might just choose a random amount between $0 to $500, or between 1 cent and $500. And we'll just chuck them that way. We'll sort the details out later. Okay, so all you need to do is really just be active on the channel. Just comment, like, show your support, ask questions, guys. Of course, we're bringing back the community question section. So just by asking a question that you want to see featured in another video, technically you're entering that giveaway. So that's it, guys. Let's get into the video. And there's a few things I want to talk about today. I've got a little notepad over here on my little whiteboard. I like to keep a whiteboard with me. It's good to write notes on. But we're going to be talking about a couple psychological barriers that people struggle with when trading, and these psychological barriers can be broken down and make you more profitable. So we're going to talk about how we're going to do that. The next one I want to talk about is obviously the 300 SMA on that log scale, and we'll do a technical analysis and talk about the short term, the price action, ECT. So let's go ahead and get into all the cool stuff first, and we'll talk about the psychological stuff later. So what's happening on Bitcoin? Let's go ahead and start with this chart, and I'm going to go to a log chart later. I want to start with this chart. Really important chart right now, guys. And little do people realize we're at a very important zone. I think a lot of people are catching on as this consolidation, continues. More and more people become a little more uneasy and skeptical and irrational. And that's generally what happens with these consolidations. People become a little bit uneasy. People love it when price is moving, regardless of moving up, moving down. When you get this sideways fluttering in the price, people become a little bit anxious. It's very, very normal because it becomes almost, the unknown. Who knows where it's going to go? What's going to happen? Is it going to go up? Is it going to go down? You got a lot of mixed opinions and people just lose it. Okay, so let's just look at the data. And the data will always be our friend. Not always going to be correct, but it's always going to provide guidance and help us remain calm, collective, and controlled in this market. Because at the end of the day, guys, that's what we're here for. We're here to make profit. We're here to make money. We're here to make the best decisions with the information we have. So what is it telling us? Well, it's telling us two things. First and foremost, we've got a major support zone. And if we lose this major support zone, we are heading down. It is simple as that, all right? And there are a few factors that can I would say, facilitate this move, all right? And we'll come to that in a second. But the zones we'll be heading to is, 14,000, major support zone indicated by the high over here. And of course, $12,000, all right? This is our POC line on that weekly, and potentially lower, okay? But I wouldn't be betting on anything lower than 12,000. I think if we do lose the support zone, and I'm talking about an actual loss, not just a random candle below and a wick up like we saw over here. We're talking about, we lose a weekly candle underneath the 300 SMA, which we'll come back and talk about, but that would be constituted as a loss of this trend line. And then we can expect the price to go lower. But yes, we can see a flicker down, push up, consolidation. All right, we'll come back to that again later in the video, but we can see that happen. So that is kind of what we're expecting. And what would cultivate that move would be, one of two things. And primarily what everyone's kind of leaning towards, and what I would be suggesting and have been suggesting the whole year, would be, economic stability. And economic stability is probably the most the most important factor when it comes to driving asset prices, because all financial assets are correlated to a plus 0.7 correlation. And what does that mean? It means when the markets are doing well, when the economy is doing well, asset classes generally all rise, but they don't all rise by the same amount. All right, that's what differs. There's where that correlation deficit comes through. That's why they're not perfectly correlated, not perfectly positively correlated. On the flip side, guys, when it goes down, when the economy weakens, when it's getting wrecked, essentially, we see assets fall. And we've talked a lot about this on the channel, like so much on the channel, that I'm not even going to talk about it again. We'll briefly touch on it later. We're not going to go into detail though, okay? So economic stability is one of the main factors. And we can see economic stability just by looking at some data. But what I like to personally look at is the DXY. So what it tells me is it actually shows me the cash flow translated of that, assumption or that current market environment or stability. Because when cash flows into cash, when dollars flow into cash, we know there's a weakening of these assets. People are looking for safety, security, all right? When dollars flow out and into assets, we see the DXY drop. So currently the DXY is in a rising wedge formation. Now we have descending momentum in a rising wedge. And, obviously technical analysis can only take it so far when it comes to analyzing, macroeconomic trends, but it can give you some kind of basis, or at least have an assumption of where we think the price is going. Whether or not it will match the assumption, different story. But it's better than just looking at it and be like, I've got no fucking clue where it's going. It's better to have some kind of idea of what's happening. Okay, so the current assumption is that a rising wedge is bearish. It will break down unless we break upwards and close a daily above. Okay, so we do expect a reversal. Now, what could potentially facilitate a reversal? Well, obviously, if the Federal Reserve announce in a few weeks that they're not increasing interest rates as much as they should be, all right, because yes, inflation is a problem. Yes, interest rates haven't even risen enough to the current date to combat the inflation. We haven't even seen inflation decrease yet, and interest rates will need to rise a lot more. So people are saying, okay, we need interest rates to rise a lot more, and therefore interest rates will rise more. And that is not always the case, guys. The government doesn't always act on the best interests of us. That's a reality. Sometimes they might even turn around and be like, we're not going to rise interest rates as much. We're going to slow it down. We're going to let the economy breathe. We're going to let the financial markets, have a bit of a relief. That's a real potential. That's a potential we have to be considerate of, right? And yes, there is more chance than not that they will continue to rise the rates. There's a greater chance that we do continue downwards, but that doesn't take away from the reality that we are at a position that has indicated the bottom of Bitcoin 3 times. Okay? It doesn't take away from that fact. It doesn't take away from that fact. That fact remains. So until that fact is broken, we have to assume that this could be the bottom. And we talked about this way back, guys, in November. We said the 11th of July. The 11th of July, guys. Look, 11th of July 2022. All right, this isn't a random number. We came to this number through a very strict and complex data, RSI, momentum, vertical analysis, okay? We got our 11th of July. And it's held true, it's basically on point. It's basically completely deadly accurate, all right? The question is, will we reverse? All right, let's take a look at the 300-day moving average. If I can go ahead and edit, we'll go to this chart here, chuck it on the log scale, and we'll bring up the 300-day moving average just to answer that subscriber's question, because he wanted to look at the 300-day moving average and get my opinions. So let's go ahead and bring it up. Let me delete that. There is a 300-day moving average, and we'll go to that weekly chart. Okay, so here it is. So you can see, I can't remember who asked the question, but someone did. The 300 moving average carries 16,500. Okay, so here comes that little bit of information we're talking about, that we could potentially see a wick down below this major trend line. We could see a wick under the trend line, and we could touch the 300 moving average. And we could, in fact, bounce on the 300-day moving average, and that would constitute the bottom. All right, very real possibility. And we're going to talk about that on the short term in a second. And this is probably the most likely scenario, is that we do lose this trend line temporarily, bounce the 300, reclaim it, continue upwards. Okay, that is what I'm going towards. That is what I'm thinking. That is what I think will occur. Okay, now Does it matter? It doesn't really matter because at the end of the day, we called up here, we didn't have the market the entire time. Whether we buy at 20,000 or we buy at 19,000, 17,000, 21,000, it doesn't matter. We'll still beat the market essentially, all right? I don't really care about catching the exact bottom, but like I said, I will try my best to predict the exact bottom for all my viewers, everyone who's watching, and that is my best prediction right now is between 16,500 18,000. 18,000, of course, at bottom because of that trend line. 11th of July is my date, and the lowest it can go is 16,500. A weekly close below the trend line will suggest the trend is broken. We expect 12,000. That is my prediction outlaid for you right now, nice and simply, right? That is it. That's nice and simple. So let's take a look, guys. 300 SMA, cool. We could definitely come down and bounce it. Real possibility. What is suggesting that is a real possibility? Well, let's look at the RSI. And the RSI is, you know, I would say the most important method of analysis we have when it comes to predicting macro trends. And I'm not going to show you, of course we can do it, you know, we've got the weekly over here. I'm not going to worry about the weekly. What I really want to show you right now is a 3-day. And I think this is where the magic happens because this is where we see the falling wedge. And we can see that the RSI has had 3 points of contention or, you know, resistance along this wedge. And these points we can line up on the chart. I'm going to quickly go ahead and show you on the chart where they have been after I remove this, just to, you know, visually lay it out for everyone who likes to see things rather than just hear things. We have, you know, points of retest right over here. All right, so we have our first, sorry, this is a little bit inaccurate. We have our first one over here. We have our second one over here. And we have our third one over here. These have all indicated points of reversal for Bitcoin. Now, no, they haven't all indicated the tops. They've indicated the tops of reversals, okay? It doesn't tell you which way the price is gonna go, but it's gonna tell you it's gonna reverse, all right? Same thing is happening on the bottom side. Where has the bottoms occurred? Where have these bottom points occurred? Let's take a look. The bottom over here, we've had 3 singular touches. Here, we've had, this doesn't really constitute one. We've had here, again, doesn't really constitute one. We had our touch over here. Okay, so we've had a 20% pump over here. We had a reversal occur over here. And finally, we're having another touchdown at the bottom. Now, will this trend line hold? Likely, it's likely. It's likely that we do bounce here. The RSI is suggesting that we do have some momentumal, you know, support down at that level. So yeah, it's possible that we hold that level when we do bounce over here. But like I said, according to the data, we can definitely see a drop downwards a little bit before we see that rally upwards, okay? So what I'm trying to say, and I know people are gonna be like, oh, Whale, why aren't you telling us what to do, blah, blah, blah. What I am telling you what to do, I'm saying there is a chance we bounce, there's a chance we go lower. There's a higher probability that we do bounce, all right? But we do have to keep in consideration that a lot of what is gonna happen is gonna be determined by events and facts and data that we don't have access to right now. And that is why I can't give you a solid, definitive answer. We have to give you assumptions and suggestions as we've been giving you, all right? And we've got data to support that. So that's about it for our macro analysis, guys. We'll do our technical analysis now. Let's go ahead and start on a 3-day. We did the RSI already. Let's go bull market Sportman. Not telling us much here, really not telling us much. And we talked a lot about why the bull market swap band is essentially a useless indicator. I think it holds value to some degree, but I think people who praise the bull market swap band too much, I think they're a little bit up in with the fairies, if I'm being honest. It's not a reliable indicator to trade based off because it doesn't tell you much. The only real data we derive from the bull market swap band is 3 things. We have data over here, we have data over here, and we have data over here. So this is number 1, is when we get a crossover. So that suggests a significant shift in trend. All right, cool, awesome. It doesn't tell us where it's going. It doesn't tell us the strength of that trend. It just tells us it's shifting. Now, the reason why it's pathetic is because if you were going off the bull market support band alone, you would assume this would have been the shift and you would have entered and you would have got wrecked. So we need confirmation, not just descriptive analysis. The reason I'm not a huge fan of the bull market support band, and I know Benjamin Cohen loves it, not calling him out, but I know he loves it. The reason I don't like it is because it is a descriptive analytical tool. It tells you what is happening. And that is not why, there's another reason why I don't love moving averages, is because they're just telling you what is happening, all right? And you can't use what is happening to gauge what is going to happen when the data doesn't allow for interpretation to that extent, to predictive analysis. So the very big difference between using like an RSI and a MACD in comparison to using a bull market support band. One will tell you what could potentially happen. One's going to tell you what is happening. And obviously you can weigh up the difference in weighted, importance yourself, but obviously it's pretty obvious which one's more important. But nevertheless, the bull market swap band on the larger time frames can suggest these macro reversals, and we can see Bitcoin as well under the bull market swap band as of current, very, very far away from it. So nothing that we're going to be looking into right now. I do want to say, however, keep an eye on it in the future, but not right now, okay? RSI I've already done, those are important ones. Ichimoku Cloud we're not going to even bother looking at on the macro, there's no point. Gaussian channel we've already talked about a lot. Got no interest in talking about that. 100-day moving average on the daily. Let's take a look at that. Because the 100-day moving average on the daily was a very significant point of resistance, if you remember correctly, when we were within this rising wedge. Remember this rising channel or something over here? The 100-day moving average really pinched us over here in this last section, which kind of pushed us downwards and forced us downwards. It was really that squeezing point for the price action in that particular period. And the 100-day moving average is moving down still currently, of course, below that 200. On the smaller time frame, let's go 12 hours. Let's see what's happening. Not too much, guys. It's not telling us too much on the smaller time frame. Let's go 4 hours. We are still under. So we would like to see a break above on the 4 hour, the 100 and the 200. As we can see, this entire period since April, we've really been underneath the 200 and the 100 the entire time. We had a little bit of time over here where people were getting excessively bullish again, which was, in my opinion, I don't know why. Maybe they were just tripping out or getting bullish for whatever reason, but it was no reason to be bullish again. But what I'm trying to say is, when we do get this break above both of these, we can start to look for moves upwards. Okay. Until then, no interest. We expect lower. So let's take a look. Short term for Bitcoin, we had that rising wedge. We told you about the rising wedge a long time ago. I'm trying to see if I can find a post about it. Hang on for 1 second. It should be over here somewhere. Rising wedge, here we go. Okay, here's the rising wedge. We had the rising wedge formation over here, and we had our targets of the red lines. Okay, very, very simple analysis. It really didn't take a genius to figure one out, but nevertheless, incredibly, accurate for that one. So we did expect a move downwards, and we can see we did hit these targets. We hit our second line, we hit that target basically perfectly. So what is going to happen now? Well, we're in a symmetrical triangle, and I want to try to remove this out of the way. We're within a symmetrical triangle. And a symmetrical triangle, or what you would call a pennant, because it's a smaller time frame, is a neutral pattern. All right. So when you have a downtrending resistance, uptrending support, neutral pattern, and it doesn't tell us which way your price is going to break, but it will tell us what we can expect when it does break. So usually the directional break results in the directional move. Directional break results in the directional move. So if we do break downwards, we expect a continuation. The distance we expect that continuation is the distance or the width of the symmetrical triangle. If we do break downwards here, it is going to take us $18,000. Simple as that. $18,000 is the target from the breakdown of the symmetrical triangle. A break upwards would take us to just under $21,000. Okay, very straightforward, guys. And of course, you jump on the bandwagon, you trade the trend. When that happens, more trades will come. During this period, and we've talked about this in the last few days, and we've talked on Twitter a little bit about it, this zone here, this gray box, is our chop zone. This is a chop zone. We have these volatile moves to either end of this chop zone, all right? These very volatile moves, all right? This is a very, very bad zone to be trading in. It is I've been trading it, but it's been an absolute freaking nightmare to trade it. It's been a nightmare. It's been volatile as hell. I don't recommend people trade this unless you have specific trades that you can find where your validations or invalidations will occur outside of these ranges, and then you can trade it. But again, keep your tight stop losses, nothing more than 10%, and don't trade with more than 10% of your portfolio at any given time, at any given trade at a maximum. I personally trade with like 1 to 2% of my portfolio at a time. All right, very, very low. Even sometimes even lower, but my portfolio is quite large, so it still constitutes a fair bit of money. But for someone who's got like a $10,000 portfolio, maximum you should put in a trade, obviously do your own research, maximum $10,000. And we're talking tight stop losses, you lose 7-8%, and if you're trading with leverage, well, then you divide it down. So if you got a $10,000 portfolio and you want to use a 10x, $100 is the max you're usually putting in. All right. So risk management is absolutely everything in trading, because you're not going to win every trade you take. It is simple as that. Although my win rate currently from last month, let's take a look at my VIP. My last month win rate was, I think it was like 80% or something. We had like 23 wins and 3 losses or something. I can't find, I'll have to look through, but I don't want to waste too much time. The fact of the matter is, you know, you're not going to win every trade, and you have to have your risk tolerance and your risk management to make sure your losses are smaller than your wins. Here we go. The last month alone, I did 87% win rate over 26 trades. So you're not going to win every trade. That is a very, very high win rate. You can't expect to even, I couldn't expect to aim for that every month. My personal target is 70% win rate. If I get anything over that, I'm incredibly happy. But my personal target is 70, and even 70 is very, very high. Most profitable traders are getting low 60s. You know, most people in crypto are getting like 20%. So, you know, you're looking at something like that, and you don't get your hopes up. What I'm trying to say is the bull market makes people feel invincible, and the bear market will humble you. Okay, the bear market will humble you. If you don't know what you're doing, you don't know how to trade, don't take the risk. Wait or find guidance. It is simple as that. That's about all I want to talk about today, guys. I hope you've enjoyed the video. Let's talk about the psychological aspects. I just want to knock that one off the list. Just because I did say I want to talk about that, and probably a lot of people are sticking around for it. So let's talk about it. There's no discussion or no argument that people can make to disprove the importance of your psychological mindset, your mindset when it comes to trading. Trading is purely, you know, information, of course, analysis, technique, but 80% of it, guys, is interpretation, and your interpretation is heavily bound to how you, I guess, perceive things, your mindset, your emotions. So your emotions control your decisions, and your decisions result in your results. All right, you make profit, you make loss. So the three biggest things I would suggest, and the three biggest barriers I see that prevent people from being profitable in this space are, number one, people are too profit orientated, meaning they're too emotionally attached to their profits, and they're too emotionally attached to their losses. You have to understand, if you are here in cryptocurrency, if you are buying investments, if you are trading, whatever it may be, you have to accept the fact that there is potential losses. If you can't accept the reality that you will lose money at some point, you shouldn't be trading. I've said that 100 times. If you lose a trade and you're upset and you're beating yourself up, there's two things that's occurred. Number one, you're just not mentally cut out just yet to be trading. All right, maybe understand the reality of the situation. Number two would be you're trading with too much money. You're trading with too much risk. All right, the more risk you take, the more emotions you're going to be putting into your trades, the more you're going to be looking at your screen 24/7, the more you're going to stress out. You should not be stressed when trading. Okay, you should not be stressed. And what I try to say to my members, what I try to say to my clients, what I've mentored a lot of people in trading before, what I try to tell them in a personal life is, if you've entered a trade and you're freaking out, you shouldn't be investing that much. What you should do is lower your investment amount until you find an amount that you are comfortable entering the trade, forgetting about the trade, analyzing the charts, making sure everything's okay, but you're not like emotionally attached to it. You're just happy that it's there. If it goes well, you make your profit, you won. If it loses, you lose. All right. And then you go back to the drawing board, you assess what you did wrong, you plan your next trade, and you try and improve. Okay. That is what it is. Another biggest mistake is people have too much directional bias. Okay. When you're looking at a chart, and a lot of people will be like, MegaWhale, don't you think it's going to bottom? Very big difference to me looking at data and analysis techniques and economic data and using foresight to predict a potential scenario that would cultivate a move upwards, all right, to someone just saying, I think the bottom's not in, we're going to go to 20K or we're going to go to 8K. Very big difference. One uses data and bases the analysis off data. It's not a personal opinion, and one is a personal opinion. If you're using personal opinion in the market, know already that you're doing it wrong. If there's any point in time that you say, I think this is going to happen, and you know in your heart that you're saying that because you want it to happen, or you just for some reason believe it looks like it's going to happen, know already that you should not use that advice in your trading analysis. Whatever you're thinking right there should be disregarded, and you shouldn't act on that until you have confirmation of the data. It is simple as that, guys. All right. Emotions will get you far. Sometimes you might get lucky, but it's not going to enable you to consistently make profit. Over a period of time, you will burn out. You have three types of traders, guys. You have burnout traders, you have consistent losers, and you have profitable traders. 80% of crypto, I know many really, really good traders, made a lot of money, got wrecked in the bear market. Burnout traders is someone that either made a lot of money and lost it all, or someone who's just kept going, and now is down like 90%. All right, 100%. That's a burnout trader. 80% of people are like that. All right, 80% of people. The next 10% of people are what we call consistent losers. Consistent losers are people who make a bit of profit, lose a bit of profit, make a bit of profit, lose a bit of profit, back and forth, back and forth, back and forth. Maybe they're at break even, maybe they made a couple $100, maybe they're down a couple $100, maybe they're down 40%, maybe up 40%. They haven't really made it, all right? Profitable traders are people who have consistent track records. You know, we're talking a year plus, 2 years plus of consistent track records, which they are profitable, all right? Very small percentage of people in the market are like that, okay? How can you get to that level? Number one, educate yourself. Know what you're looking at. Understand how the market moves. Understand the charts. Understand what things mean. That is what we're here for in this channel. We're showing you. I'm interpreting the charts for you. I'm looking at the data. I'm telling you what is happening. All you need to do now, take that data, decide whether you want to apply it or not, act on it without emotion, okay? The next one, before, after knowledge and interpretation is obviously emotions, guys, okay? Emotions is the big one. Like we talked about before, those barriers will prevent you from making profit, okay? The third big emotional barrier or psychological barrier that I do want to talk about is revenge trading. And this is a really common one, particularly for newer investors in cryptocurrency and just generally in stocks. People feel like they are on the clock. And if you heard that and you understand it, that's good. You feel like you're on the clock. You feel like you're in a rush to make profit. You feel like you're in a rush to make it. You feel like you need a trade every day. You feel like you need to take 10 trades a day. If you have that feeling, just slow it down, buddy. Just slow it down, because that feeling is going to get you wrecked, because that feeling is going to make you take excessive risk. That feeling is going to make you trade when you probably shouldn't be in conditions that you shouldn't be trading. That feeling is going to make you feel emotional and make you feel devastated when you miss a trade or blah, 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 blah. All right. So calm it down a little bit. Number two, when you are irrational and when you are emotional, you make worse decisions. It's no doubt. All right. Revenge trading. If you is someone who makes a loss and then goes back out trying to make a profit, and then they lose again, then they are back out and make a profit. It's like a gambler. Okay. The best strategy to prevent revenge trading, and if that's you, someone who goes on massive losing streaks, you're probably a revenge trader, okay? If you go on massive losing streaks, you're probably a revenge trader. If you're a revenge trader, the best thing to do is to take a step back, stop trading for the day after you've made a loss, and just clear the mind, calm your emotions, take another look at the chart, realize that tomorrow's a new day full of new opportunities. One of the greatest things about cryptocurrency, guys, and one of the best things, one of the things I love about cryptocurrency and trading in markets is every single day is literally a brand new opportunity to make it into space. You never know what's going to happen tomorrow. This market moves so quickly. It's so volatile. There's new things all the time. You never know what decision you're going to make. Tomorrow, you could literally wake up, make a decision that could change the course of your life. Okay? There's been many times in my trading career that I've felt defeated. I made a few bad trades in a row. And then the next day, I make a trade that completely makes all those profits back and a different mindset completely. All right, but obviously, you want to build out of that emotional attachment, but it takes a long time. It takes years to get to a point where you're unfazed by market moves. Okay, I've talked way too much today, guys. I hope you've enjoyed the video. Obviously, if you have made it this far, thanks for watching, guys. And I'm really grateful for everyone who watches these videos. Obviously, I never expected to get this big. When I started my Twitter and my Telegram, my initial intention was to help a few select people. Like I said, I've been a trader for a bit over 7 years now, and only for the last year and a half, since last February, I've had social media. I've been talking to people, I've been helping people. It's been a very lonely journey. You're by yourself making money. It's very unsatisfying. And one of the greatest satisfactions I get from this is being able to help people. So the last year and a half has been great. I really appreciate everyone who's coming to support me, everyone who's helping, everyone's learning something, and everyone who's profited or just saved their money from my advice. I really appreciate it. I really think we can grow more as a community. I appreciate the support. So 3,000 down, guys. 5,000 the next target. And I guess we'll leave the video there, and If you're interested in sign up to Bitget, trade by trade. And if you want to learn how to become a trader, I suggest you purchasing the Crypto Academy Become a Trader course. And we'll talk a little bit more about it. And if you're interested, just email us to the comment section down below. You know, I've taken years of experience and knowledge and analysis and applied it to this course to really give you guys the best footing in the door and a nice kickstart into technical analysis and an in-depth understanding of how to actually use it to find trades yourself. Anyway, guys, I'll leave it there. Thanks for tuning in, and I'll catch you tomorrow. Okay guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here. And of course, like I just mentioned, you get access to that reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.